Apple just shipped its 3 billionth iPhone since 2007 when the product launched. You might be seeing that headline as well as others, as this is a big week for Apple. They just reported their quarterly earnings on Thursday after the close. Here are a couple of game notes that Wall Street took from the call. In terms of the numbers they reported, they had a really strong quarter. They beat the revenue expectation by almost $5 billion, coming in at about $94 billion. Earnings per share also beat the street's expectation by about 10.5%. What's most notable here is that revenue from the same quarter a year ago jumped 10%. That is the biggest growth that Apple has seen since December 2021. Let's talk about the stock though. They are down 17% in 2025, 7% in the full 1 year chart. And if you zoom out to the 2 year chart, they're only up about 3 or 4%. They're currently sitting at about $202 a share, about 10% below the 200-day moving average, which is around $220 a share. It is worth noting that despite being down, Wall Street was generally happy with the quarter. It jumped up about 2%, 3% in after-hours trading, but things are generally being pulled back down here due to some macroeconomic data we're seeing and not necessarily related to Apple's performance or the vision of the company. There are two main reasons why the stock is so beaten down. One is tariffs. They're very prone to tariffs. They have reported about an $800 million cost to their business related to tariffs, but what's most notable is that that cost is projected to be about $1.1 billion for the current quarter. Seeing that go up is creating a massive headache for Tim Cook and the company as they try to work the supply chain to get around this. It is likely to keep the stock suppressed in the meantime. The good news is on the AI side, they're continuing to make progress on the updated version of Siri and anticipating that release still in 2026. Apple, despite being this behemoth of a business, is actually pretty simple. It's 70% products and 30% services. On the product side, it's all about iPhone, and iPhone crushed it in the last quarter by 13%. They came in $44 billion in revenue versus $40 expected, contributing massively to that top line number. On the services side, they came in just above analyst expectations, but nothing that's going to necessarily move the stock. One risk to the services side of the business, though, is their exclusive partnership with Google to be the default search engine. This brings in about $20 billion into that services bucket on an annual basis for Apple that is currently being worked out in the courts. No particular update related to it, so I don't think the stock is necessarily going to move today, but it's something to watch out for. Overall, a really strong quarter for Apple, but because of unknowns like tariffs, the Google deal, and their AI products and services, I think their stock is going to continue to tread water until we get clarity on that. I'll have updates on all the big tech names and more. Stay tuned. Be good out there.